Good morning to everyone joining us today. It's a pleasure to be with you to discuss such an important topic, the 2026 tax reforms. My name is Roberto Cantu, tax partner in Monterrey office, and I have the honor of moderating this session. Next slide, please. Before we begin, allow me to briefly share who we are. At Forvis Mazars, we offer customized solutions in tax, audit, outsourcing, consulting, financial advisory, sustainability, and legal services, both globally and locally. In Mexico, we have a presence in Mexico City, Guadalajara, Mexicali, Monterrey, Puebla, Querétaro, San Luis Potosí, and Toluca. Our team is built up of more than 570 professionals, led by 21 partners, allowing us to serve our clients' needs exceptionally well, regardless their size, location, or sector. Next slide, please. Today, we are joined by experts from our tax team, who I will introduce as we move through each topic. Salvador Garcia, tax partner, Jaime Puga and Luis Ramos, tax directors, and Francisco Ceballos, tax senior manager. Next slide, please. The topics we will cover are federal revenue law, reforms to federal tax code, reforms to the excise tax law and digital platforms, changes in the financial sector, and fiscal incentives. At the end of the session, we will have time for question and answers. We invite you to write your questions in the chat at any moment. Additionally, at the end of the webinar, we will launch a very brief satisfaction survey, which we'll kindly ask you to complete. It will take no more than 5 minutes and help us to understand how we can improve for you. Next slide, please. The next one. We begin with the first topic, federal revenue law, presented by Salvador Garcia, tax partner. Salvador has more than 19 years of experience advising multinational and national companies on complex tax matters, including corporate strategy, tax compliance, tax planning, rate optimization, design of business models, and due diligence. He also been speaker and instructor for several universities in Mexico. Please go ahead, Salvador.
Thank you, Robert. Good morning, everyone. And today I'm here to talk about the federal revenue law, which was published last November. As you know, the government bases its spending policy on the revenue budget included in this law. That's why it's very important to review it. So let's take a look at this slide where we can see the main estimates made by the government. And for example, the inflation was estimated at 3%. That is less than the last year, which will be a challenge given the economic condition of the country and the world in general. Regarding the economic growth, OECD countries have an average annual growth rate of 3%. Mexico estimated 1.8% to 2.8%. That it's below the average of the Latin America countries. However, this estimated is very optimistic considering the last 2 years there had been practically no economic growth. In fact, the last year it was 0%. So this estimation is very optimistic. Regarding the exchange rate, it was estimated at 18.9 pesos per dollar. this is another challenge to consider this year, because given the macroeconomic environment and all the movements in the foreign policy of the US and Russia and other countries, well, I think it could be a change a lot along the year. And you can see that the low exchange rate established below the 20 pesos, and that is the average that we have in Mexico, is not a really good news for Mexico, considering that Mexico is an exporting country, which means less money will enter to the country from the US and around the world. And the Mexican Federal Treasury certificates interest rate has been reduced compared to the last year, dropping to 6.6%. This is an effort to encourage direct investment in the country's economy rather than leaving the money in the banks. Due to the low interest rate, that they want to return to the money to the market. With all these indicators, the government projects a record-breaking tax revenue reaching 5.83 trillion pesos. This representing a 5.78% increase compared to the last year. So, in summary, there are minor changes, but they will have a significant impact on taxpayers, as the tax reform is leading Mexico to project the highest tax revenue in the country's history. The next, please. Well, I like to move on to the next part, that is the key axis on which the government relies to collect the historical revenue that I mentioned before. There are no changes to the tax incentives. They remain the same as the last year. This means that the taxpayers who are already using incentives will continue to do so. And there will be a tax regularization program for tax payments, where the taxpayer who with outstanding debts can pay them without surcharges or penalties. We will detail the program further, but this clearly aims to ensure the government receives money as quickly as possible and avoids illegal battles that could drag on for years. It's better for the government to have the money quickly and now than receive a larger amount of money, but many years later. They want the money right now. The surcharges rate has been increased. This aims to ensure the taxpayers pay their taxes on time and correctly. Otherwise, it will be very costly to be in debt to the tax authorities. And I think that this is a change very important, because the situation between the taxpayers and the tax authorities will not be like before, where the tax authorities review the company and issue a tax assessment, and then the taxpayer could defend themselves and maybe go to the court, and finally, after a long litigation, have to pay some taxes. I think that now that has changed, and now is highly recommended to avoid an audit by the tax authority in all cases. I think that considering 3 points: the current state of the Mexican court, the increase in the surcharges rate, and also because it will take a lot of time and resources of the company to attend these audits, when at the end you probably have to pay some taxes. So today, I think that it will be necessary to invest in improving the tax compliance, having a tax advisor who reviews the company operation faster than the tax authorities in order to avoid any tax risks that could trigger in tax payment. They will increase the withholding tax rate on interest in the financial system to 0.9%. It's a minor change, but which almost the double that it was the last year. This is another measure aimed to collecting money for the tax authorities faster than waiting for the annual tax return to be filled. And another, the release of tax letter. This program has worked quite well for the government. Remember that the tax authority already have a lot of information of the company almost in real time. They have details on all the invoices issued by the company, all the company's accounting records, all the annual tax return. So they have a bunch of information, and they can use this information to determine an approximated tax for each company through the application of technology and robots. And if the approximated tax does not match to the tax submitted by the company, tax letters are issued so that the company has to verify its financial situation and pay the corresponding taxes. So this is program that has had very good results for the tax authorities, since practically without incurring personal cost, they can review each taxpayer and they can identify discrepancies in all them and try to collect taxes. The next, please. Regarding the debt policy, it was something that received a lot of media attention last year, and then it was widely debated in the political sphere, because this is the year with the largest debt contracted in Mexico history, as you can see. Never before the country has authorized such a large amount of debt, and we all know the consequences of over borrowing. It's very dangerous for the country, of course, and I don't want to go too into a lot of details, only to mention that one of the main concerns the tax authorities these years will be collecting more taxes and faster, because as you can see, the government will need the money. This obviously have effects on us regarding the tax compliance and tax refunds. And you have in mind all the complications we have in VAT refunds. For example, well, it could be worse, because again, they need money and it won't be easy to get it for the government. The next, please. And finally, I'm sharing here the changes in the surcharges rates. And as I mentioned before, it will be very expensive to fall behind on taxes. For example, for late payments, the rate will be now 2.07%. So imagine if you stop paying taxes for a year, the rate will be 24%. It's almost like a bank loan. It will be very costly for the companies. And also for the rate for partial payments have also changed depending on the installments chosen, whether up to 12 months, 2 years, or more than 2 years. And also the rate for extension also saw an increase in the interest rate, as you can see. Now is 1.38%. Well, these are the main points to consider regarding the federal revenue law. And I think that I can sum up in 3 points. That there are no significant changes, but there are minor ones that will help the tax authority to collect more revenue faster. The largest debt in the country history will be contracted. And with this in mind, the highest amount of taxes will be collected, even more than the last year. So we have to be aware of the tax situation of each company. This is the end of my presentation. If you have any question, there is a section where you can write it down to us, and we will have a Q&A section in the end of the presentation. Thank you very much.
Thank you, Salvador. Very interesting what you have said. I think the tax authorities has improved their mechanisms to collect money from taxpayers. It is very important for us to act in this sense and be preventive on what we are doing with our tax calculations. We continue with the reforms on the federal tax code presented by Francisco Ceballos. Francisco is an attorney with a master's degree in tax law, and he has more than 12 years of experience in tax consulting and advisory services for both domestic and foreign individuals and corporations. He has participated in corporate structuring, mergers and acquisitions, project financing for special transactions, and the incorporation of new companies in Mexico. Please go ahead, Francisco.
Thank you, Roberto. This year, the reforms to the federal tax code have been substantial. Some of them more relevant than others, but we are going to touch on every single one of them. One of the main changes that was done to the federal tax code was the reform of false tax invoices, which nowadays represents one of the biggest challenge for the tax authorities to combat the use and issuance of false tax invoices. Now, one of these relevant changes was that it is elevated in the federal tax code, which is federal law, that in order to be real, tax invoices must cover existing, real, true operations or legal acts. This is because there used to be a discussion regarding what a real tax invoice really means as opposed to an apocryphal one, and there was this whole legal discussion about it. This reform squashes the discussion, and it straight up provides that it must cover an actual existing transaction in order for it to be considered real. We're not going to get into details of the effects of issuing false tax invoices. They are very, very severe and very numerous. But here they are made even more numerous. For example, starting 2026, legal entities will be denied taxpayers' ID registration if one of their legal representatives or one of their shareholders has a relationship with another company who has been identified as either issuing or acquiring false tax invoices. So this is very, very consequential, because if a company is deemed to be either issuing or using false tax invoices, all of its shareholders and all of its legal representatives will be pretty much barred from starting new companies and registering in the taxpayer's ID. In order to secure this fiscalization efforts, a new specific investigative powers have been granted to the tax authorities in order to verify the veracity of tax receipts issued or used. This is like a regular tax audit, except it's going to be specific for tax receipts. It's going to have shortened deadlines and a temporary suspension of the digital stamps for the issuance of tax invoices. So imagine a regular tax audit, but during the whole audit, you are not allowed to issue invoices. So this is also going to be very consequential when it's actually put to practice by the tax authorities. Next one, please. Now, passing on to other changes to the federal tax code, there has been efforts for tax simplification, strengthening of legal certainty, and suppression of arbitrariness. We're going to touch very quickly on them. So some changes regarding identity verification only by the tax authorities using the digital signature known as FIEL. Changes to that. Facilities for taxpayers under the simplified trust regime. More facilities for taxpayers under the RECICO regime. And also, this is also relevant. It used to be on a regulation that the final date to cancel tax invoices will be that the month in which the annual tax return is filed. This already existed in like an administrative regulation. It has now been elevated to law, to the law of the land. Administrative review or reconsideration. This is an internal tax authorities procedure. New rules are issued for it. Not very relevant for the private taxpayer. Reduced fines for RECICO taxpayers. This is in line with what I was talking about regarding administrative facilities for RECICO taxpayers, and an extension of deadlines for notifications. Again, also more administrative stuff not very much relevant for the regular taxpayer. Next, please. Now, also within the changes to the federal tax code, there has been changes to the, there has been a strengthening of powers to the tax authorities in order to undertake their audit processes or their revision processes. One of the most relevant has been the cancellation of the digital stamp certificates for the issuance of tax invoices. New grounds have been established for the temporary restriction of tax invoices, which is, as most of you know, a very, very serious issue and a very serious hindrance to the transactions and the operations of Mexican taxpayers in the event that they should get the digital tax certificate temporary or permanently canceled. Now, tax credits that have not been paid in full, which have been deemed firm, again, the certificate will be canceled. Recicos that fail to make monthly payment will get their digital stamp canceled. Not having customs matters like transgressions regarding customs regulation will also compel a digital stamp cancellation. And this is very important, accounting discrepancies. This is also yet been left very open-ended. What exactly is an accounting discrepancy? Well, it's very much left to the criteria of the tax authorities. So this just doubles the importance of having a very, very strong defense file within the accounting records. Some regulations to specifically fintech entities. They will be more equated to banks, specifically in the accounting statements. There has been new internal regulations for the tax authorities for the purging of taxpayers that are not that are registered in the taxpayer's ID but are not undertaking any economic transactions. And more obligations for public notaries regarding the verification of documents. Next one, please. Again, for the hydrocarbons and oil sector, new requirements for the issuance of tax receipts. This is, again, something very common. Companies involved in the energetic sector, specifically hydrocarbons and oil, are subject to very strict regulation when issuing tax invoices. So there's even more requirements and regulations for this tax year. Digital platforms that provide digital services to public in general now have the obligation to provide the tax authorities with ongoing and real-time access to their databases and the information in which they hold. And it is yet to be seen how this will be implemented, but that's the plan for 2026. Using technology tools in order to facilitate the tax authorities with their audit process. Again, just strengthening the powers of the tax authorities during the audit processes. Additional channels for the authority to notify taxpayers, again, facilities for the audit process. Now, this point is relevant. When an authority is exercising audited powers upon a taxpayer, they very commonly request or demand that the taxpayer produce certain information, accounting records, working papers, organized in very specific manners that even though the authority is demanded during the audit process, the taxpayer may not be obligated to hold them in the first place. So this provision provides that they will be obligated to produce such documents or produce such working papers in the event that the tax authorities demand them during an audit process. So this is also very relevant, very important to keep in mind, and it just highlights the importance of having a strong defense file in order to create audit readiness. Next one, please. Now, still in the subject of powers for the tax authorities during the audit processes, registered public accountants now have obligations to disclose before the SAT if they have relevant information regarding tax felonies. The provisions that allow paying customs-related tax credits in installments are repealed. Now, tax credit regarding customs will be paid in full lump sum. More conditioning for infringement and penalties. Just more and more regular practices that used to be considered regular will now be considered to be an infringement, and will be needing a penalty. Combating misconduct in defense actions is now considered grounds for inadmissibility during an administrative appeal. This is regarding unduly practices during the defense procedure before the tax authorities. Specifically, the administrative appeal it was used to, let me just say, to abuse this mechanism to the detriment of the tax authority. This has now been removed, or is been trying to be removed. And mandatory order for the guaranteeing of a tax liability. This is again also during a tax litigation, the guarantee of the tax interest. And again, more measures in order to combat the illicit hydrocarbons market. Also very big problem for Mexico regarding the insecurity issues and the organized crime syndicates that are operating in this country. More tax regulations have been issued in order to try and combat this problem. Next one, please. Now, regarding foreign trade and customs, yes, more tight regulations have been issued this year in order to combat illicit practices such as smuggling or just like unduly importations of goods and merchandise. Now, security codes for cigarette packs. Cigarettes and alcohol are subject to specific security codes that are tramited before the tax authorities. Failing to print the security codes will be equated to the crime of smuggling. So for cigarette manufacturers, this is extremely relevant. Improper practices during tax proceeding, again, declaring false information or data regarding foreign trade will now be a sanctionable conduct. This has always been the case for the rest of the accounting records, but now it's been made specific for this one. And the presumption of smuggling and equivalent acts when the temporary importation of goods are brought to the country without the proper mechanisms for the temporary importation will now be considered crime of smuggling. And for my part, that will be all. These are the most relevant changes to the Federal Fiscal Code, and I hope it was of interest to you. And now, again, I'm open for Q&A at the end of the session. Thank you very much.
Thank you, Francisco, for your participation. It's very interesting how this reform on the federal tax code was has the mainly purpose of provide the tax authorities with new tools on performing their tax audits. We now address the reforms to the excise tax law and digital platforms presented by Luis Ramos. Luis is an accountant with a master's degree in taxation, and he has more than 13 years of experience in corporate taxes. He currently leads the indirect tax practice at Forvis Mazars in Mexico, serving both local and international clients. Please, Luis, go ahead.
Thank you, Roberto. So good morning, everyone. Okay, so let's start with the Excise tax, or IEPS in Spanish, and the main changes coming in 2026. Okay, so this slide helps us to see what important is the reform, and it is not a technical update. It is a reflects the broader change in the policy. Okay, so first of all, we start with cigarettes and cigars. Okay, the general rate increases from 160%, okay, to 200%. That is a 25% increase across the sector. Okay. Next one is for the handmade cigarettes. Okay, so the rate increase for 30.4% to 32%, showing a difference but a still upward approach. On the most important changes in the inclusion of the Excise tax is the nicotine products. Okay, as of 2026, the sale and import of nicotine products will be subject to Excise tax as a 200% rate, including vapes and similar products. This is the news on the Excise tax. And the specific fee for cigarettes from 0.64 pesos just to 1.15 pesos increase and approximately 80% according to 2025. This fee will continue to increase gradually through 2030. This is important to consider, and it is not applicable in this year, so it is gradually. The other products that modify in this tax reform is the flavored beverage. Okay, for the flavored beverage, the fee per liter almost doubles, and now explicitly includes the beverage sweeteners. Okay, and from the first time, violent video games and a subject for 88% to Excise tax. This represents a significant expansion to Excise tax into digital content. Finally, online betting and prize games increased from 30% to 50%. Brokerage platforms are required to withhold a 10% of applicable Excise tax. Okay. So this is the updates rates in the Excise tax for products and specific in cigarettes, for for nicotine and video games, and for prize games or betting. Okay. The next one, please. Okay, let's now to move for changes of the digital platform in 2026. Okay. Okay, we'll start with income tax and VAT. For individuals in income tax, for individuals selling goods or providing services through platforms has a flat rate for 2.5% income tax withholding applies. Okay. For legal entities, withholding is also the same rate, but the important thing is that the legal entities don't have or without right deductions, so increasing the cash flow impact. So if the legal entities to provide a tax ID, a punitive withhold of 20% applies. Okay. On the VAT side, the platforms must withhold the 15% of VAT for compliant and legal entities. And regarding for withholding, VAT withholding increase that 100% when the tax ID not provided. Okay, when the provider is a foreign resident without permanent establishment, or when the payments are made off foreign accounts. So this is a big penalty if the digital platforms not provide to the Mexican tax authority the tax ID for your clients. So the withholding increase as a 100%. So this is the new on digital platform changes in the rates for 2026. Okay. And then for Excise tax, the violent games withhold as an 8%, and broker platforms withhold to 100%, and online games and sweepstakes, it is a withhold of 50%. Okay. Next one, please. Okay, so in the case of digital platforms too, is the platform was blocked or temporarily completed with the government. Okay, what does that mean? Until now, the first time Mexico tax law specific allows to the authority to block digital platforms, okay, when certain tax obligations are not met, okay. It is a major shift to the government. What it means is until now, enforcement rely mainly on penalties and assessments. In 2026, the enforcement becomes operational, okay. So the law introduces specific articles to define when the platform can be blocked either partially or completely from operating in Mexico. Okay, so this is not a theoretical risk. It is important to mention because it is applicable directly affects to apps, to websites, payment gateways, and digital intermediation. So the Mexican tax authority has the decision if any application in Mexico can block it temporarily or completely if this kind of platforms not comply with your tax obligation in Mexico. Okay, what is the first cause to block these kind of digital platforms? The first one is the lack of real-time access. Okay, the first trigger of temporary blocking is when the platform fails to provide a real-time access to the tax authority, as Francisco mentioned it before. Okay, this includes access to transactions data, payments flows, and seller information and operational records. So before to 2025, it is not included, but in this year, the Mexican tax authorities includes these rules in order to have more vigilant to the digital platforms. Okay. Under the Federal Fiscal Code, Mexican Federal Fiscal Code, denying a real-time monitoring is now equivalent to not complying. And not complying, it is equivalent to block the operations in Mexico. So it is important that if any digital platform not provide in real time the information of the clients, the Mexican tax authority block the access to operate in Mexico. Okay, this is the new for the digital platforms. For the second reason that the tax authority can't block the services to the digital platform is the omission of the tax or withholdings. Okay, so this applies for income tax, VAT, and excise tax, specific in digital activities. Okay, such as gambling, violent video games, and digital intermediation, as we mentioned before. These are fundamental changes. Okay, before 2026, the authority could only impose fines, but now it can suspend operations. The logical is simple. Okay, if the platform controls the payments flow, it is responsible to ensure the tax is collected and paid the Mexican tax authority. So in this case, that the responsibility to collect the taxes, it is not from the Mexican tax authority, is for the digital platforms to collect these taxes and then to pay to the Mexican tax authority. If the tax authority not comply with this, the Mexican tax authority block the services in Mexico. And the third cause is regarding to content related, okay? As we mentioned, platform has that distribute violent or adult right content, including video games, can be blocked if they are fails to comply with Excise tax obligations, content classification rules, or minimum consumer identification requirements. So in this case, if the tax digital platforms not withhold the Excise tax, the Mexican tax authority can to block the access. Okay, it is important mention it because on December 31st, in 2025, the Mexican government published an exception related to the 100% of tax credit of Excise tax. Okay, so in this case, it is not does not eliminate the obligation to withhold the excise tax. It's only that in this year, the Mexican tax authority not collect this excise tax for video games, okay? But in the future, we can review in the future in 2027 or in the future if the tax authority eliminate this tax credit. So it is important to mention, okay? So in summary, the temporary blocking becomes a stronger enforcement to digital platforms, okay? Are introduced more control to this kind of entities to operate in Mexico as a digital economy, okay? So it is important to consider that if you are a digital platform, consider the all tax compliance to consider in Mexico, because the risk is not penalties. The risk is that you cannot operate in Mexico because the tax authority blocked the services. Thank you so much.
Thank you, Luis, for your participation. It is very important. I think we will see an important impact for the next month on the prices of the goods related to this rate increase on products on excise tax, and also how the tax authorities are auditing or control the digital platforms for this year. Finally, we will review the reform for the financial sector and tax incentives presented by Jaime Puga. Jaime has more than 10 years of experience in international firms, providing domestic and international tax advisory service to global corporations. He has led multinational projects such as corporate reorganizations, share transfer, and due diligence across various sectors, from retail to maquiladoras. Please, Jaime, go ahead.
Thanks, Roberto. And thanks everyone for joining us today. And as mentioned before, this is a reform that is not substantial. The basis of the tax structure in Mexico remain the same, but there are very special and significant changes that could represent one of the biggest hits in the last years for the financial sector. So entering into matter, starting with the banking institutions, the first change that was already commented by Salvador is the modification on the interest withholding rates. Now the rate is almost doubled. It passed for the 0.5% to the 0.9% per year in the amount of the capital invested. That is one of the highest increase in the latest years. And it shows what Salvador mentioned before. The tax authorities want to collect the taxes now and needs to enforce the collection by all the agents, similar to what happened with the withholdings in the digital platforms and other withholdings that have been established for this year. Then the two biggest changes for financial institutions in Mexico are the modification for the banks to obtain the deduction of the bad debt. As you may know, for the previous years, the banks have we can say, easiest process or easiest procedure to deduct the bad debt that they obtain for their operations, and it was basically based on their estimations and provisions. Now, the banking institutions are required to start this procedure as any other taxpayer in Mexico. This means that they will need to provide the evidence that they exhausted all the legal means prior of the apply this deduction. This means that the deduction of the bad debt could take several years, or once the procedure starts, well, that is significantly different from the previous years. And the other one is the deductibility of the contributions to the IPAP, or the Mexican Deposit Insurance Agency, the one that protects the savings of the Mexican populations. Now the banks are only allowed to deduct the 25% of their contributions. That is a very, very significant impact in their cash flow each year. The other one is regarding the insurance institutions. For this year, the Mexican VAT law was modified to state that the VAT that is paid in the acquisition or the import of goods that are going to be destined to replace the matched ones, or to compensate the beneficiaries of the insurance policies, should be considered as not creditable. This means that almost all the VAT that is paid by the insurance institutions could not be creditable for starting this year. And additionally, if we go to the transitional provisions, it's clear that the tax authorities want also to keep this treatment for the VAT that was paid during 2025. They are going to deny this credit too, but they will provide a particular tax incentive that will allow these taxpayers to obtain a credit that will be equivalent to the VAT that was paid during 2025, including all the accessories, penalties, charges, and all of that. But this will require the insurance institutions to apply for this particular incentive, and all the regularization should be done prior March 31st of this year. So the insurance institutions that are going to or planning to apply for this tax incentive should start with the modifications and corrections to the prior year tax returns in order to be able to apply for this incentive. Otherwise, the only means to obtain a defense of these new provisions should be the legal ones. Going to the court, that would be a very exhaustive and prolonged and long and long process. Next one, please. Okay. Now, for the institutions that are acting as intermediaries, now they have a new obligation to withhold the 9% of the nominal interest, including the premiums agreed, as an estimated payment, as a income tax estimated payment, when they are participating in security lending operations that are not considering sales. So all the transactions that this institution acts as intermediary will now require to perform this new withhold. And this also is applicable for the debt, equity, and investment funds. they are not required to perform this new withholding. And even if this is not a direct tax for them, this will be required to them to update their systems and be able to comply with these new obligations. You know, you are not only required to withhold, but you will also required to issue the corresponding withholding receipt, the CFD for retenciones, as known in Spanish, and all these should be adapted and modified on the entities systems. Well, and regarding the fintech institutions, and as I mentioned before, the tax authorities want them to be more active in the collection of taxes activities, and now they are required to withhold the 20% of the interest paid for legal or natural persons that are resident in Mexico, and 35% for non-residents. Also, they are required to withhold the 16% of the VAT of the nominal interest, and also comply with the obligation to issue the corresponding withholding receipt of their CFDI or CFDI, the retenciones. And please could change to the next one. Okay, now, and as mentioned by Salvador, the regularizations programs remain active. This has been a program that was considered a successful one for the tax authorities, and they want to keep it into force. Basically, the taxpayers that want to be part of this program will obtain a 100% discount or incentive equivalent to the fines, surcharges, execution charge, sanctions, and all that are derived from their tax and trade and customs obligations. And this benefit is only applicable to individuals and legal entities that obtain a taxable income lower than 300 million pesos during 2024 and have enforceable tax debts. All applicable regulations and notices that modified are or have been published as part of the Annex 2 of the administrative tax rules. All the information is going to be provided by the tax authorities, and we are also working in a newsletter with the key relevant changes of this one. Another relevant one is the tax incentive related with the World Cup. Technically and in a brief, the facilities and the incentives consist in extension granted to foreign residents that are participating in the organization and celebration of the World Cup. All the applicable regulation to these new incentives are contained in the Annex 2 of the administrative tax regulations. And also, one thing that is important to consider on this, the FIFA will be the one that should inform to the tax authorities who are going to be the beneficiaries of these new incentives. And finally, regarding the repatriation of capitals, that is a tax incentive that has been back and forth on the last maybe 10 years. It's now in force again, and it will be it consists in a preferential tax rate of the 15% to those legal entities, natural persons, or foreign residents with a permanent establishment in Mexico that decide to repatriate legal capitals with a legal source of wealth to Mexico, and these capitals should be invested in productive activities. These capitals also should be maintained at least for 3 years in Mexico, and one of the applicable productive activities are the new fixed assets, lands, construction, research, payment of federal tax liability, salaries, governmental bonds, strategic new projects on infrastructure, health, education, pharmaceuticals. A more detailed list is provided in the Annex 2 of the Administrative Tax Rules. And also, this is only applicable for the funds that are repatriated during 2026, and all the funds must be invested no later than December 31st, or the second semester on June of the following year. And as mentioned, just to close this, all the modifications, the modifications that have been enforced are focused to increase the capacity or the capability of the tax authorities to obtain new resources. Not relevant changes are enforced for the new tax laws, but those focused to the financial sector are those with the highest impact.
Thank you, Jaime, for your presentation. Certainly very relevant impact on financial sector that will impact also us. And okay, let's move forward to the questions. If anyone has any additional question or comment, this is the moment to write them in the chat. And we have a couple of questions related with digital platforms. The first one is related with the exemption published in December 31st. Is there some expectations that the government will eliminate the exemption in the next year, or is there a probability that could be eliminated? I think Luis Ramos can help us.
Yeah. So thank you for the question. So yes, there are a strong political and practical indicator that the tax will not be implemented, but it has not been formally repealed from the law. So it is remember that in the excise tax law, it is states the excise tax in video games. So the tax, it is only eliminated as a tax stimulus. Okay, so as we mentioned, if in the future the president eliminate this stimulus, it's the all digital platforms applies the excise tax law in 2026. So it is not contemplated to eliminate this kind of tax in the law. So only is for a tax stimulus.
Thank you, Luis. And also related with this item, it says, well, the tax incentive, other than make an exemption on the withholding of 8%, does this also applies for the reporting, in presenting the information to the tax authorities as well?
Okay, so as we mentioned, so in this case, the excise tax states the obligations, okay, for report this kind of withholding to the Mexican tax authority, okay, but only for this year in 2026. In this stimulus is only to not pay this withholding to the Mexican tax authority only for this year as under this tax stimulus, okay? So, but the information or obligation or any kind of tax declaration regarding for digital economy or tax withholding for the excise tax, it is vigent, okay? What does that mean? It is that it is for the digital platforms, needs to collect the withholding for the excise tax, but not paid to the Mexican tax authority only for 2026, okay? But it is not, the only tax stimulus is to not pay this, this tax for Mexican authority, but the obligation to collect this, the excise tax, it is an obligation for the digital platforms.
Thank you, Luis. Let me see another question. It says, how can the temporary restrictions of digital tax seals be prevented under the new grounds for restrictions? I think, Francisco, can you please help us with this?
I'm sorry, I didn't understand the question.
It is related with cancellation of digital tax sales.
Yes.
Under these new regulations, how can we prevent the cancellation or the temporary restrictions of digital sales?
Well, that is a very complex question. Of course, the more straightforward way to do it would be to have a complete defense file regarding the validity, the actual reality of the operations of the company. Please bear in mind that before the outright cancellation of the seals, there is a temporary restriction. This temporary restriction can be lifted if, let's say, if the irregularities have been corrected. So how to prevent the cancellation of tax IDs by having a very robust compliance with tax obligations, and specifically regarding whatever conducts may lead to the cancellation of the tax receipts. It's just a matter of compliance and having a audit ready defense file.
Thank you, Francisco. There is another one related with tax incentives, and it says, if a regularization tax incentives applies, are there inflation adjustments still payable?
Please consider that the regularization incentive is applicable for all the fines, penalties, and surcharges, but you are required to pay the tax that is the origin of these penalties and other payments. And for in general purposes, in general terms, the inflationary adjustment is part of the original tax.
Thank you. Let me see another question. It seems like there are a lot of questions related with the excise tax. Another one said, what happens if any excise tax product were invoiced in December or in 2025, but collected in this year in 2026? Which tax rate will be applicable?
Okay, well, so I asked this question. So in this case, remember that the disposition applicable in 2026. Okay, so if you operating as a digital platform with any kind of video games or something else that you can to withhold this excise tax, the payment of this tax is in 2026. Okay, the reason I mean is that if you invoice any kind of operation in 2025, you're not subject to pay withhold of excise tax in 2026 because the disposition is applicable in operation that you realize during the fiscal year in 2026. Okay, so it is important that don't confuse the times because the disposition is in force in 2026, okay, and pay this withholding in this year. Okay.
Thank you, Luis. Think there's another one, and it says, mm, with the new changes, do we need to invoice the expenses related with the intercompany expenses? I think, Francisco, can you help us?
If you agree, I can jump in very quick on this one. And the short answer is yes. You need to stamp the electronic invoices related with the intercompany charges. And this is not only for the new regulations. This is also required from previous years.
Perfect. Thank you, Jaime. Okay. Well, thank you very much. To close, we would like to thank our speakers. Please turn on your cameras. And most importantly, everyone who joined us today. We hope this session was helpful as you begin this year informed and supported by your experts. Please feel free to contact us if you need more information on how we can assist you. Please do not forget to complete our satisfaction survey, which will appear at the end of the session, as your feedback helps us continue creating valuable content for you. Thanks once again. I would like to take this opportunity to wish you all the best in this new year that just has begun. We look forward to see you again with more content for you. Thank you very much.
Thank you.
Thank you.